This week we're going to talk about momentum. We've talked about some more in-depth topics in the past. I wanted to make this week kind of short. It's the 13th week. We're going into the final week next week, consolidation breakouts. So I just wanted to cover a quick topic, momentum. Now, first thing we need to cover is momentum is more commonly noted as Momo. So if you see the word Momo on any of the chat boards or Twitter or MyTrade, StockTwits, places like that, or you hear it from me, then we're talking about momentum. And this primarily goes out to the intraday traders that are watching this, because momentum can be utilized from a short-term swing trading perspective, but it's more so it's more so correlated with intraday trading, and it's a simple situation. So momentum. Let's say we've got a little bit of an uptrend, just a moderate uptrend going on, and let's say this is an intraday chart. Then all of a sudden you get some spike in volume. Here's you got normal volume, then you got some spike in volume. Just consistently higher volume with consistently strong accelerated uptrending. You can take advantage of this by buying the stock, and you can manage your risk by basically adjusting your stops on the way up, so that when the momentum fades or dies completely, you'll stop yourself out of the trade and lock your profits in. So let's just say, for example, we happen to be watching this specific stock, and it's uptrending moderately, and we see this spike in volume and a nice push to the upside. So at this point, we're just right here at this initial push. We say to ourselves, this could be a nice start to a really strong momentum uptrend acceleration. So you buy the stock, let's just say right here at that peak, and you place your stop about 50% below, about 50% of that initial move. So your stop's going to be just under that 50% point right here. So if that was a dollar move, you'd want to place it about 54 cents below the entry point if you got it at the peak. And you continue to see this momentum to the upside. So let's say the stock gets to about right here. You're up nicely from your entry point from here to here. So you say to yourself, I'm going to lock in some profits, or I'm just going to ensure that I break even on this trade. You have two choices. Again, you can place your stop 50% of that secondary momentum move. So if it was another dollar move, you'd want to place it 54 cents, roughly 54 cents under that current price point. Or you can just place it a little bit even lower than that and put it at your initial entry point. So that in that case, you're ensuring break even. In the other case, you're locking in just a little bit of profit. And as this thing continues, as the momentum rally continues, you'll just want to adjust your stops accordingly, just below that 50% point on each consecutive move. And eventually, this momentum is going to fade, and you're going to get stopped out. Let's just say right here, you get stopped out. But from this point to this point, you've made yourself a decent chunk of change from an intraday perspective. Whether it be 1%, 3%, 4%, half a percent, doesn't matter. You're positive. You managed your trade correctly. You took advantage of a momentum opportunity. You got in. You got out. That's it. So that's a bullish momentum or bullish Momo example for you. And the same situation for a bearish momentum. And we could say that this was more of a swing trade perspective. So let's say we saw a stock we've been watching that was just moderately downtrending or even sideways trending, and then all of a sudden broke to the downside on a nice spike in volume. So we had moderate volume and a nice spike in volume, and the volume stayed consistently higher than the previous volume. So we catch this, and let's say in this example we don't catch it until, say, right around here. So in that case, you're just going to want to do the same thing. You want to place your stop about 50%, just a little bit above 50% of wherever your entry was on that secondary spike. And then, just continually adjust. Once it gets here, adjust it to there or adjust it to entry. Once it gets here, adjust it a little bit above 50% of that most recent downside momentum spike, or momentum dip, I should say. And then eventually, say when it gets here, you're going to adjust to there. And then let's say it pops here, you're going to stop out there. You've got your entry here, and your stopped out exit here. You managed yourself a nice little trade, and you took advantage of the momentum once again, but in this time from a bearish perspective. So momentum is not something that you're not going to place momentum-based trades extremely often, but it's simply a good tool to have in your bag, and this is good information to know. So just wanted to cover that for you. That's Momo for you. See you next week.